Home Depot fails to inspire. The dye movement. Home Depot fails to inspire. The dye movement in China. With the Chinese economy in the midst of a growth spurt and the housing market following suit, 2006 seemed like a good year for US-headquartered dye giant Home Depot to dip its toes into the market. It was until they'd opened 12 stores that they realized the Chinese didn't really like to do it themselves. Unlike the Western world where renovating your home is considered a bit of a hobby, developing countries have a tendency to see dye as a sign of poverty. By 2012, Home Depot had shuttered its stores and taken a $160 million after-tax hit in the process. File under, needs improvement. Walmart creeps out the Germans. Like Home Depot, US big box retailer, Walmart failed to take into account cultural nuances, in particular personal space, when it opened up shop in Germany in 1997. The chain opened 85 stores in an attempt to tap into the frugal country's lucrative discount department market. But with intricate labor laws, restricted business hours and rows upon rows of regulatory red tape, the market was harder to crack than the American retail giant anticipated. Starbucks too hot and expensive for Australia. Massive US coffee chain Starbucks ended up with a ton of melted iced macchiatos when it tried to push into Australia in 2000. Much like Target's failed leap to the Canadian market, Starbucks went down under with similar naivete. Aussies act the same as Americans, so why wouldn't their coffee drinking habits be the same? Unfortunately, the local movement dominates the Australian coffee market, and for those prone to visiting chains, Starbucks proved to be too expensive. But the slow burn didn't set in until 2008 when the caffeine peddlers suddenly closed 61 stores to the tune of a reported $143 million loss. Starbucks kept the faith until 2014 when it handed over the remaining 24 shops to the Withers Group, which operates the 7-Eleven chain in Australia. Best Buy too big for its britches in the UK. Best Buy entered the UK market in 2010, buying up a 50% stake in UK mobile phone company Carphone Warehouse for $1.3 billion. The goal, which was initially to launch 200 stores, was revised to 100 stores but didn't even get that far. By late 2011, the big box electronic retailer announced it was closing the lackluster 11 stores it had managed to open during the run. The reason? Despite keeping an eye on strategic acquisitions for years before making the Carphone Warehouse play, Best Buy chose the apex of the worst economic decline in recent history to open up shop. The whole bungled affair was estimated to have cost the company around $318 million. Hey ILO gives up in North America. Unlike Walmart or Home Depot, it took London, UK-based taxi-finding app Hey ILO less than a year and a half to decide it wasn't up for a rumble with entrenched competitors Uber and Lyft, both peer-to-peer, ride-sharing networks powered by apps. Despite getting around $77 million in investment from high-profile venture capital groups like Atomico and Union Square Venture, Hey ILO didn't see much point in trying to compete in the price war between Uber and Lyft when it's doing just fine in Europe with nearly 2.5 million registered passengers and 2013 revenues of $100 million. The company pulled out in October 2014, shutting its operations in Washington, Chicago, Boston, Toronto, and Montreal. Mattel misses playtime in China. It's clear the Chinese are a tough consumer for Western retailers to entice. In March 2009, Mattel hoped to hawk its skinny fashionista Barbie to the kids of China. The goal? Build a giant 36,000 square foot Barbie stronghold with 6 floors, a staircase lined with 875 Barbies and a Barbie-themed bar in the midst of Shanghai's flashy retail district. Unfortunately, Mattel didn't study its market enough. Tesco fails to whet US appetite. For UK-based grocery chain, convincing American consumers to shop at its Fresh and Easy seemed like a done deal. And a few years earlier, the brand could have found success selling its fresh supermarket meals to the growing local and organic consumer base. But Tesco's Fresh and Easy opened the doors in 2007, on the edge of a recessionary cliff when American consumers' appetite for food spending was heading south. 5 years later,